Yeah, good morning, and glad to join you on Team Blue today. Um, in terms of valuations, so I mean, it depends what you look at. We're looking at price to book traditionally. The price to book valuation of EM is quite cheap, particularly amongst us or versus some of the developed markets. But it's more about a couple of reasons that I like emerging markets. The first one is around the short term, which is the tactical tourism angle, as I call it, which is basically beta chasing, where we've seen investors very much underweight risk, overweight cash, and essentially underperforming benchmarks. So reaching for risk in places like emerging markets, that's something we've seen in the iShares space in the last couple of weeks. Year to date, we've had about $12 billion of outflows, but recently we've seen a little bit of a pickup in inflows. From a longer term perspective, we call it the three E's of EM investing around number one, expected growth. So the growth is going to be the strongest in Asia and emerging markets in 2021. The evolution of the index as we get more A shares inclusion moving forward. And the third one just around easing. So easing of FX volatility, which has been a pretty big deterrent for US dollar investors over the last couple of years, and easing of monetary policy across emerging markets in Asia.
So you essentially are basing your thesis on looking at EMs favorably on the back of monetary easing or fiscal easing in this part of the world. Hasn't policy action thus far within EMs, broader Asia, underwhelmed and underperformed what we've seen in the Western world thus far? And so what is going to change? Because we are already deep into this crisis. So do you think that that would be a consideration for policymakers to step up?
Well, that's exactly the point. We have been a little bit underwhelmed in emerging markets in Asia, and that's the reason why I think central banks here in emerging markets in general have more ammunition to actually stoke economic growth, both this year and in 2021. So the projections for Asia growth next year around 7.5% versus the US 3 to 4%. It's quite difficult to convince investors to go overweight emerging markets versus US because it's been a 10-year underperformance besides 2017 when we saw that huge Goldilocks rally and risk come on and move into emerging markets. And I think that's what's happening now. But from a longer term structural perspective as well, I think there's a lot of growth, index revolution in Asia as well as the easing of FX volatility. And don't forget the US dollar is weakening as well, which is a big tailwind.